Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. It was another whipsaw price action overnight for the Australian dollar after taking another challenge at that key level of 66.8085 and was rejected after posting an intraday low of 66.71. From the rejection we can see that we've posted a bullish hammer from the Japanese candlestick and therefore could see further gains to the upside. To support that though, we need to see a clearance, and that is of around 67.45. If we get that clearance, that would confirm the bullish candlestick, and along with that the bullish divergence that was clearly evident from yesterday and also on Friday. And if so, the clearing of 67.35.45 would give an open passage towards 68.05.15 and reassess from there. At present, the euro is still holding relatively bullish, as we can see from that heavy sell-off from last Tuesday, that the last four candlesticks have been in a bullish case, and therefore from the close we still need to see the market above 100.15. We did see an intraday high of 100.29, but unfortunately the New York close wasn't confirmed. Nevertheless, the market is still holding relatively firm, as the US dollar index, which measures the greenback strength against a basket of six major currencies, slipped slightly at 109.32. If the market can progress further, then we are looking from above 100.15 to the downtrend, which is at 100.80.90, and reassess from there. As we can see over the past, it has been very challenging at this level, and it may do so again. If we see any pullback, the support is seen around 99.5, and then from there the key base at 98.80.85. This week though, all eyes will still be on the key market driver, which is the US Federal Open Market Committee, or the FOMC, monetary policy ceasing, which conveyed today, and will wrap up on Wednesday, or Sydney time, at 4 a.m. It is expected that they will announce a further 75 base point rate hike to attempt to ease inflation, which came out surprisingly high last week at 8.3. The dollar-yen case, well, the market has broken the trend, but no follow-on to the downside as of yet. I'd still like to see these technicals a little bit more confirming that of the break, and therefore would see further indication to a slide towards the level of 142.20 to 141.05.15. The bears have been around since last week when the Bank of Japan carried out a rate check, which is a precursor to intervention for the direct market action. Still, keep an eye on the top side. If we see any rally, should find resistance roughly around 143.70.80. Sterling a little bit firmer, and we've got a sort of a potential hammer to a dragonfly doji coming through here, but I would like to see a little bit more strength coming through. I like there is some divergence here, and therefore I could see further gains, and that is if we see a close above the level of 114.55. And we're trading just beneath there at the moment, around 114.30. The gold also coming through quite clearly to a positive case with this Japanese candlestick at New York close, close to a dragonfly. But I would like to see, like most of the other markets, confirmation. And that is a clearing of 1,678.82 in New York. And this would give further opening towards the top side of 1,694.98 to 1,711 to 13. And wrapping up with oil, well, the market did take the challenge to the downside, as you can see here, and stabbed an intraday low of 81.65. From the downside call, it was around 81.45, so we were only just 20 points from the low. Still, we've got a weak candle coming through to a bullish case, and that is a dragonfly doji. Looking to the upside, if this candle is relatively bullish, then we could see a move up towards the target of 86.55.65, and that is where we need a break to reinstate the upside to 88.5 or maybe up to 91. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report and also the end of the day wrap.